When it comes to rental properties, most investors settle for a 10% cash-on-cash return, but don't settle for 10% when you can get 40%. Conventional wisdom says 10% is what's possible. That's the number that gets repeated in books, podcasts, and YouTube. But here's the problem. When you accept conventional wisdom, you put a ceiling on your results. Most investors want more, but they don't believe it's possible because nobody tells them it's possible. That's what I'm here to do today, to shatter that conventional wisdom. And stick around because later in this video, I'm going to share a real case study where we took a property from 10% returns to over 40% and show you exactly how we did it. And here's what most people miss, and it's the reason they'll never break past 10%. And my wife and I have seen this over and over after helping thousands of high-income earners build their real estate portfolios. You get what you aim for. If you aim for 10%, that's usually what you'll end up with. But if you raise your sights 20%, 30%, even 40%, suddenly you start noticing opportunities that you completely missed before. One of the clearest examples, a strategy hiding in plain sight that hardly anyone is talking about, but one that can take your returns far beyond conventional wisdom: supported living. This is one of those moments where you'll look back and say, why didn't I know about this earlier? So what exactly is supported living? Instead of renting your property to one tenant or family, you lease it to an organization that provides housing for people with intellectual or developmental disabilities. Here's a reason you need to know about this. These organizations are funded by the state. This means they sign long-term leases, often pay by the bedroom, and they usually cover utilities, landscaping, sometimes even routine maintenance. And the best part? Once they sign, they guarantee the rent, whether or not the rooms are filled. Think about that for a second. Higher rents, lower expenses, zero vacancy. Put all that together and suddenly your cash-on-cash returns don't just creep up, they skyrocket. Let me show you exactly what this looks like with one of our own properties. We bought a simple, Rambler-style duplex for $160,000. At first, we rented it out like a normal duplex, $950 a side. Our return? Around 10%, exactly what conventional wisdom says is good. But then we converted that same property into supported living. Rents went up to $1,200 per side because we were charging by the bedroom. Utilities and landscaping? Covered by the organization. And vacancy? Gone. We get paid whether the rooms are filled or not. That single change took our return from 10% to over 40%. Same property, same market, but a completely different outcome. And this is the kind of strategy that almost nobody is talking about. Now, if you're a high-income earner, this is where it really matters. Let's be honest, if you're making $300,000, $400,000, maybe even more a year, an extra $4,000 to $5,000 from a rental property isn't going to change your life. It's nice, but it's not meaningful. But when that same property generates $16,000 to $20,000 a year in cash flow, now it's worth your attention. That's the kind of cash flow that accelerates your ability to scale. It's what lets you go from one property to several, and from small multifamily properties into bigger assets where the cash flow and tax benefits are truly life-changing. Here's the part almost nobody talks about. This isn't just about money. Supported living serves an underserved population, people with intellectual and developmental disabilities. For decades, many almost had no choice in housing. They were institutionalized or forced into settings that stripped them of their independence. Supported living programs changed that. They gave people the ability to live in the community, to choose where they live, who they live with, and to live with dignity. Organizations like the ARC regularly highlight the stigma and barriers this population still faces. Housing is one of the biggest. So when you provide a home through supported living, you're not just building stronger returns, you're making a meaningful impact on someone's life. That's why we love this strategy so much. It's a rare win-win, significantly higher cash flow for you and a chance to give back in a meaningful way. So here's a big takeaway. Don't let conventional wisdom tell you what's possible. Most investors settle for 10% because that's the number they've been told to aim for. But you can aim higher. You can believe higher returns are possible, and when you do, you'll start finding strategies like supported living that take you way beyond what most people think is achievable. This is how you scale faster. This is how you build real wealth. And this is how you create freedom while also making an impact in your community. If this sounds like the kind of opportunity you'd like to pursue and you're ready to take action, just click the link below to book a free strategy call. Our team will show you the steps you can take to get started today. If this video opened your eyes to what's possible, make sure to subscribe and check out our other videos where we go deeper into how to increase your returns, reduce your taxes, and build wealth through real estate the right way. Thanks for watching, and I'll see you in the next one.